Hello, everyone, and welcome to another session with me, your host, Maria, on building wealth. Today, we are going to be discussing in free form money management and how to set aside money for yourself, for the now, and for the later. And I know we've been having this theme of building your wealth and setting your goals, but I wanted to divert a little bit away from that and speak a little bit to those who have the funds or are planning to have money coming in, and they just want to know how can they manage their money wisely and what are some tips and tricks that you can use. And I also just want to put out a disclaimer there and say that I am not a tax accountant. I'm not a tax person. And this information is purely for educational purposes. So if you have any other questions about some of the things I will be talking about, please feel free to reach out to a financial advisor or a tax advisor, and they should be able to answer your questions to the best of their ability. All right, so now that we have that out of the way, let's go right ahead and talk about these things. And in this day and age, there is a lot of information out there that you can also research for yourself and figure some of these things out. But I thought it would be helpful to share from my perspective what are some of the things that you can do to help make your financial picture look a little healthier. So one of the basic things you can do is start with a basic savings and checking account. And the reason I bring this up again is because it's really the beginning of everything. Having an account and having that money somewhere where it's going to be earning you interest or giving you cash back is a good way to begin your journey. Of course, there are a lot of people out there who don't do that. I'm not saying it's a standard practice, but it's one of the good ways to be able to build self-discipline and money discipline, because trust me, it does take discipline to manage your money wisely. Not saying that you're not supposed to spend it, but once you know the value of money and the importance of taking care of your money, then you will spend it wisely and you will actually enjoy spending your money. All right. So, and just one more thing about the savings and the checking, so you don't think I'm not really giving you good information, is that make sure to look out for high yield savings accounts specifically. And on top of that, if you are looking for checking accounts that suit your needs, look out for those. And in this modern age, there are a lot of banks out there that provide services tailored to your needs. So say, for example, you want to have both your checking and your savings attached together and earning a sort of reward on them, you can find those type of accounts. But I usually like to look for accounts that give you a good interest, because I like my money working for me. And when it comes to the checking, usually people use checking for checks and paying bills and things like that. So look for one that doesn't have a lot of fees associated with it, that could either give you a cashback for your transactions or like an interest on if you perform activities. There are very few out there that will just let you let your money sit in a checking account like without you doing the work. So really, the checking account, you have to actually kind of work for your money, if you get what I'm saying. So yeah, just make sure you are looking for accounts that suit you and accounts for savings that have a high yield, because, and by high yield I mean like high annual percentage yield or a monthly interest, because that will really help you in the long run, especially if you're someone who is looking to put money aside for an emergency fund and cash that out after a while. Then by the end of that term, you will be having a sizable chunk of interest in there. Your money is actually really working for you in there. So that's about the savings and the checkings. And then another thing that you could think about, and you can find this information online too, is consider having certificates of deposits, or what they call CDs. And the reason I bring this up is because right now in this period, there are a lot of seasonal offers out there from banks and special rates for CDs. And a CD basically is a type of account where you put money in there and just let it sit. You don't touch it until it matures after a period of time. And like savings and checkings, there are a number of CDs out there with different terms, so make sure to read the fine print. What I would say is that it really depends on what you're looking for at the end of your term, or what you really are looking to do with your money. So let's say you, for example, have an X amount of cash that you have out there. You don't foresee using it in, let's say, between 6 months to 2 years. You want to put it somewhere where you feel it will be safe and earn some interest for you, but you don't want the temptation of reaching in there and taking out that money. A CD would be the perfect tool or instrument for you to use, because you would be able to let it sit there and accrue its interest. And the good thing about the CDs is that they compound, so you're letting that money sit there and work for you at the same time. And by the end of that term, if you feel like you don't need that money immediately and you have other cash available for your use, you can roll it over. But there's usually like a grace period of when you're supposed to do this. So check with the banks or the institutions that are offering the CDs, so that you know exactly what you're getting. And another thing about them is that there are those that will give you variable rates, and there are those that will give you fixed rates. The good thing about the fixed rate is that you're locked into the rate. So if you have a good rate, then you will have that through the term. The variable rate, the downside with it is that if the interest goes down, and this could happen because of any number of factors, or because of inflation, the markets, that could affect how much interest you're earning on your CD. So always look out for that fine print and make sure you are, picking the right product for your money needs and your financial goals. All right. And then the other thing that you can also consider is looking into retirement accounts. And these are type of accounts that set you up for your retirement. So like when you're done working and doing the 9 to 5, or, you just really want to live on your own time, you can look into these accounts and setting these up for you. One thing about them is that according to the law, I believe you can only cash them out or get access to them by the age of 59 and a half, or if you're a first-time home buyer and you really need the money. But it's really meant there to grow, like a nest egg, to grow, and you put money in there a little bit at a time every single month, and it will grow. And by the time you reach that retirement age, you are able to take that out and live on it. So you really, for this one, I would really encourage you to speak to a financial advisor, because it really depends on what you foresee your retirement looking like. For example, do you see your retirement having more expenses than what you have now, or fewer expenses? Do you think you're going to be in a higher tax bracket when you're retired, or a lower tax bracket? And the way you answer those questions will be able to advise you and tell you whether what kind of retirement account you should open up, whether it should be a traditional IRA or a Roth IRA. And another thing is that these different accounts also have different ways that you pay your taxes. So this is why it's really important to, before you make a decision, is sit down with a financial advisor and ask them what this all means for you, what you're looking to accomplish, and they can advise you on how best to go about it. But it is always good to plan for the future, because you never know what's going to happen. Okay. Now the other thing that I like to do a lot, and that I do encourage people to do, is figuring out what your net worth is. You need to understand what net worth means, and what your current net worth is, and what your ideal net worth would be. And then you try and bridge that gap between what it is now and what you want it to be, by making sure you're getting your finances in order. And you do that by doing all these things I mentioned, and other things as well. Like, for example, acquiring property, becoming a homeowner, improving your credit if your credit isn't that great, maybe having a business. And it really depends on you as a person. Like, what do you want your net worth to be? If you are comfortable with your net worth as is, that's all fine and dandy. Like, you don't have to change it just because you think you have to. But it is good to know your net worth, because you will know what your liabilities are and what your assets are. And if you have more liabilities than you do assets, then you probably want to think about fixing that. And then the other thing that is really important to know and exciting to work around is determining your lifestyle. What do you want your life to look like, as opposed to how it is now? What do you need to be able to accomplish that? And I know I spoke about this earlier in some podcasts past, but it's just to reiterate, like, if you want to have the lifestyle where you are able to go on vacations and have enough money in your account to pay your bills, and then some over to help your family, or just be at peace because you have the money there and you don't have to worry about it, then you need to put in the work to get to that level. And I need to also mention that these things take time. You are not going to become that vision tomorrow. It's going to take you time. And for you to get there, you really need to put in the work. You need to be disciplined with your money and your finances and your mental well-being as well, because sometimes it will feel like it's a lot, or there's a lot of challenges, but you kind of have to stay the course, because once you get to that level that you want and you're able to actually experience this lifestyle that you have been building towards, it will be worth the wait. But I also want to say that and this brings me to the next point, is don't overcompensate for the future and put yourself in hardship now. For example, if you have a house and you're paying a mortgage, and let's say you have to sacrifice a lot to pay your mortgage, look into options like refinancing your mortgage, because that will lower the amount of bills that you have to pay. Yes, it could increase how many years you're paying off the bills, but it will improve your lifestyle so that you're able to spend on these other things that you need to spend on. And that's really important. It's important to have a good retirement lifestyle, but it is also important to have a good lifestyle now, wherever you are. And this is why I always speak about the importance of building your wealth now, is because as you are building, you are improving yourself. You are improving how you spend. You're improving how you save. You're improving how you live your life, how you experience things. And you will enjoy it because you're like, okay, so this money is valuable. And if I'm going to spend it this way, it has to be something I am enjoying doing. I'm enjoying spending this money, and I know I'm going to make it back. But on the other side, don't splurge. So you have to find like a medium that works for you and that you're comfortable with. And you need to define your lifestyle now. If there are things like the little quirks that you really want to improve, go ahead and improve them. But don't make it so drastic that it is difficult for you to enjoy your money and enjoy spending and enjoy living and enjoy saving. Make it enjoyable for you. And that's the whole point of making money. Money comes in, money goes out, money grows, money is invested. It has to go somewhere. But just because it's going out or coming in doesn't mean you cannot enjoy the process, learn from the process, and grow with the process. And I just want to encourage you to always be thinking about that and understanding that, because you will understand this with every transaction you make, with every paycheck you get, or commission you get, or dividends you get. And I know I haven't spoken about investments, but that's another way for you to make money and increase your net worth, is investing, either on the stock market, in real estate, or businesses. You will learn to appreciate money, to appreciate your part in the money cycle and the economic cycle, the macroeconomics and the microeconomics of it all, as you're growing through your journey. And I just encourage you to stick and stay the course. You will not regret it. All right, that's it for me. I hope you guys have a lovely week and a lovely month. And I'm looking forward to spring. I hope you are too. Bye.